politics, the Olympics, and the markets, we say game on. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your market update for Monday, the 13th of August. Well, here we all are back on Monday and seeing the markets on the defensive from where they closed on Friday. This past weekend, we did witness the closure of the Summer Olympics with an impressive medal count for the U.S. and for Team GB. The other big news this weekend was the announcement from Mitt Romney that he has picked a VP running mate. In case you haven't heard, if you're off the planet maybe, Paul Ryan, the 42-year-old congressman from Wisconsin, is the pick. Regardless of your own political beliefs, and we say game on, what's happened now is the race for presidency is going to have a direct bearing on the markets, so we should all be paying close attention. On the other side of the pond, the Bank of England Governor King was quoted this weekend in the Sunday Mail, which is an English newspaper, as saying he sees no obvious end in sight for Europe's crisis. It would appear as though the European problem, as well as the slowdown in China, is not even on the radar of most traders at the moment. Europe, China, and now Japan and the upcoming general election will give traders a lot to think about. As always, we're going to rely on our trade triangles to point the direction to where the markets are headed in the months ahead. The odds are the trade triangles will get it right. We'll let others argue which way the market's going to go. Now let's take a look at the charts in our own trade triangles and see what's happening in the markets. Well, it's something very special today. We're going to be looking at a couple of stocks that we don't normally look at. One is Dow Chemical, which you can see right here is on my front page. It's in my portfolio. It popped up today. It's minus 100. And I want to show you, just using a very simple strategy, how you can improve your trading quite easily with one tool in Market Club. And let's go to that portfolio page. And we're looking at the Dow Chemical, and we already have the monthly trade triangles, and you can see them right here. This is just to be about the monthly trade triangles. And if you just took these signals alone, you didn't listen to anything else, you just listened to these signals, and you would be a winner. Let me just put the markets in here, this buy, sells, boom. And here you are, we've got a lot of things going on. So we'll start here. So the first buy we're looking at, and this is in May of 2009. It was right here. It's a buy at 16.19. We exited that position right here on the monthly trade triangle. See the red trade triangle right in the middle here? At 25.59. That produced a profit of $9.38. A very nice profit, I might add. We then stayed out of the market from May until October 05, excuse me, 5th of October 2010. We entered the market again at 28.50. And we sold that position at 34.65 on June 15th of 2011. That also produced a profit of $6.15. Now we stayed out of the market for the down pull right here, the down hole, and we got back in right here at 29.56. And that was on the January 3rd of 2012. So that's the position, buy 29.56. We're out at 31.53, which produced a profit of $1.97. So here we had three trades, right here, three trades, three winners, and a profit of $17.50. This is just using a very simple strategy over the last couple of years. Now the market, had you just bought and held it, you really wouldn't have done any better. And that's the point. In fact, you'd be considerably worse off if had you bought this in 2008. You'd be losing money and having sat in the market for 4 years. Now, you could say, oh, we just picked the best spots. Not really. And there's a sell point right here. And that sell point was somewhere around, just around $38, $39. Well, in fact, let's just clear the screen, and we'll go and we'll look at it right now and see where that sell point is. So the sell point came in at $35.22, and we got back in the market at $16. It's about $19 cheaper that we got in this market. Now you could say, well, we just picked this one spot. Well, let's take a look at Dow. Let's go back a while back, and you can see we got some nice trades here, out at 47.55, in again at 39, out again at 43. So again, you can see these trades are not, we just didn't pick the best one to show you. We actually showed you all of the trades. And this is what you can do using Market Club. So very simple strategy, very easy to implement, and it'll help you. So let's take a look at our markets today, starting with the S&P 500, and we're going to be going down through a couple of other stocks. We'll be looking at Cisco and also Tesoro, and they've all had moves, and you'll see how they work. So let's go with S&P 500 first of all. Plus a 60. This market has been plus 60, plus 70, minus 70. It's really going nowhere fast, and today's action is not particularly good. I think if we close below 1400, and certainly if we close below, I think this level here, below 1390, it's going to be under a lot of pressure. I think this could be we're at the top of the Donchian trade channel. We've talked about this before. The market looks like it's rolling over. Today's the first down red day, if you can see that. You've had 1, 2, 3, 4, 5, 6 days in a row. I think we're going to see a pullback, and I think we could very easily get back to this 1370 level, particularly if the market, and that's the people who are trading this market, start to look at what's going on in Europe and also what's going on in Asia with Japan and China. So let's see how that plays out. But generally speaking, it looks like it's just turning around, rolling over from the highs of the Donchian trade channel and potentially moving down to the midpoint. So let's go to our next market. Next market we're looking at is the euro. This actually had a recovery of sorts, if you can call this a recovery. We're still negative on it. We think this market's really going to see how it came from the top of the Donchian trade channel, and it just came back and tested the midpoint, which is right here, which we talked about. So we just came from this level to this level. And I think really what we're going to see this happen is it's going to come down, roll over again, and start down again towards the lower end of the Donchian trade channel. So let's see how that plays out, and let's go to our next market. This is crude oil. Now, crude oil was doing better earlier today. Then it sort of hit a very bad patch on the defensive. Again, this level here, this 94 level, is really proving to be a tough sledding for this market. And it looks like we've gone from out of the trade channel right here, out of the Donchian trade channel right here, and I could see this market moving back at least to the midpoint, and certainly potentially down to the 88 level, which is the lower end of the Donchian trade channel. So again, it looks like it's just moving over like this. Every time we've done that, we've come down to like the midpoint of the channel, and I think this is going to be another key level. Midpoint's about 91 right now of the Donchian trade channel. So let's see how that works out. So let's clear that screen, go to our next market. We've mixed these up a little bit to make it more interesting for everybody. This is the Dow, obviously under a lot of pressure today, and I think we can see more of that happening. Again, I think we're just at the top of the channel, and we're just sort of rolling over like this. And today's action, certainly if we close, I would say below 13,000, I think 13,090 was one of our points we had. If we close below there, I think we could see this market under a lot more pressure early next week, and trading down to the midpoint again, this level right here around the 12.9 level in the Dow, which would be pretty close to where the previous lows were. But that's how we see this market for the moment. And again, if any of the news comes out of Europe or even Asia that's negative, and it's just perception, how people trade and how people view the markets. If we see this market, people say, oh my God, Europe's not good, or interest rates are being really challenged, then we have a lot going on. Now, this is gold. We've talked about the gold market, and you can see what's happening there. And you can see really, realistically, this market's having a very, very tough time right around this level, right around the 1630 level. We've talked about this quite a bit, and you can see how it really stops the market. 1625 is about the place it stopped today, and this is a sharp down move, 1608. I think we're going to go back to the midpoint at least, and potentially all the way back to the lower levels of the Donchian trade channel. So it's really been incredibly interesting. We're plus 60 here. All the markets, it seems, are plus 60, minus 60, which means they're basically in very large trading ranges rather. So let's see how that plays out. But generally speaking, I'm not excited about gold yet. There's no reason to get excited. The mechanics just aren't there for a bull market. So here we have the NASDAQ. Again, this is a little bit tight. I think if we close under the 3,000 level, we're currently trading just around 3, pretty much where we are right now. So again, I think this is all going to boil down to probably the last hour of trading, last half hour of trading. But if we close down below 3,000, I think psychologically you'll see a lot more pressure coming into this market and a pullback to the midpoint, which is right here. So let's see again how that plays out. But look at how the similarity with all these markets plus 60, it's a trading range. So it sounds really frustrating to see this, but longer term we still have our negative monthly triangle, which is negative. The weekly is positive, so you get this conflict, this 60, which is a trading range, and I think that's the bottom line you have to look at. So let's clear that screen off. And also, I think the volume is telling you that the markets there's not a lot of liquidity there. I think a lot of traders are still on vacation, maybe getting back from the Summer Olympics, I don't know, but not a lot of liquidity or volume in these markets right now. One of the stocks we want to talk about today is Tesoro. Now, Tesoro is obviously having a big move today, but I want to show you this. I mean, we don't know anything about Tesoro, what they do. I mean, they're in the oil business, I guess. But look, we got involved with Tesoro on our monthly trade triangles that came in again, boom, right here, and that was at 27.27. The market's trading at 38.93. A nice move to the upside. We caught that, not knowing anything else, just using the simple monthly trick with MarketClub and following it religiously. So let's clear the screen off because I want to go back and say, oh, well, maybe we're just showing you the best trade here. Well, I'm going to show you a little more of Tesoro and see what you think. So let's just scope this out. We could go maximum, and you can see, look, out here 45.40 on December 11th, and that's 2007. Boom, you get back in at 16, from out at 45 and in at 16 and change. So again, a huge profit. You catch a nice move up here from 13.22 up to 22. So a $9 profit right there. And here you've got a $10 profit already in the books. So again, it's not luck. It's definitely trading with the trend. Here's a nice trade here, 17.01 out at 30. That's a $13 profit. Again, back in at 35.70, out at 50. So another $13 profit there. So again, are you going to have all profits in these things? No. You're going to have losses occasionally, but the losses aren't going to be as great as the profits. That's what we've seen. You got a plus 100 score, meaning a strong trend, and let's see how that just plays out. So let's go to our next market. But I want to show you these stocks and just say we're just not pulling the best stocks out, but these are big stocks that you can follow and track yourself and see what's happening. Now this is copper. I'm going to scope this in a little bit closer. And you see copper's not acting well, and it's just really coming down towards the lower end of its trading range. It is plus 80. It's more of a downtrend than anything else because you do have the triad, let's say, the monthly, the weekly, and the daily, all negative, pointing to lower levels. So let's go to the next market. That's Cisco Systems. I want to show you, Cisco has been around for a long time. It's a big, well-capitalized stock, and I want to show you the markets, what's going on there, because here you've got a move. The monthly is still 19.27. The market's 17.34 after having a big rally. If we scope this out just a little bit more, you'll get to see. There's the monthly that came in at 19.27 on May 4th. Boom, 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 boom. And it's not to say, who's to say it can't go down to 15 again or even lower. I mean, it has been lower than that. If you scope this out even further, you can see how this market, there's a nice trade again. Boom, monthly 16.77 out at 19.27. So not a great huge trade, but a profitable trade, and that's the important thing. And rather than stick with it, kind of stay with this, and it's suddenly down here and you say, oh my God, what am I going to do with it now? This takes a lot of the worry and also the concern you may have on the market to just let you get in the market and make that trade, have this sort of discipline, this sort of religion, if you want to call it. And if you scope this out further, well, look, I mean, I'm not. This is just the reality. It's not. I'm not doing this, but you can see here's out at 22.56, in at 16. Now these are nice trades. I mean, no matter what anyone says, these are nice trades. In at 16.77, and then out at 19. So it's still a nice Nothing dramatic, nice steady profits. And when you're out of the market now, from 19, you're not short. You could be short if you wanted to. If you want to trade this on the short side, you're just out. Let somebody else worry about this. This is going to go up. But the reality is the odds are the longer term trend for this market's down. So let's go to our next market. That's the silver market. Again, this market's been very frustrating for a lot of traders. You can see just a straight line. 55 is the score. Trading range, trading range, trading range. That's all I can say. And let's go to our next market. This is the CRB Reuters Index. Now you've had a number of grains, the metals, the oil, all soft today. So that's why you've seen this pullback. If you remember, we've been talking about the 305 levels being major resistance with our long-term at 305.38. That was the signal we had. You actually had an opportunity to get that signal on last week. You could have gotten at 305, actually go to 306 and change, and now it's coming down. We're at the midpoint. Can we possibly go down and challenge the lower point? Yes, I think we probably can. It's just the way things are. We are oversold again, but having said that, I think it depends on the general risk on, risk off type trades we're looking at. So let's see what else we have here. This is Dow Chemical. We talked about that earlier. And again, there's a big market, minus 100, negative, negative, negative. So, hey, we've covered a lot of stocks. I wanted to show you the monthly way. That's for long-term traders only. So if you're a short-term trader, that would not be the way to go. If you're an intermediate-term trader, that would not be the way to go. But if you're a long-term trader, you want to be trading at the market every day, you just want to get the big signals right, then the monthly trade triangles are the right way to do. And to learn more about the monthly trade triangles, you can simply give us a call. It's a free consultation, 877-219-1482. It's a free call. And see if Market Club one-on-one coaching is right for you. You can learn all about this and really improve your score and your trading profits using the techniques we're sharing with you on this. So, hey, I'm Adam Hewison. I'll be back tomorrow at the same time, same place. Good to be back for this week. Let's see how the markets react and trade, and I'll be seeing you tomorrow, same time. Have a great trading day.